The banking crisis of 2023 has a lot of investors running away from banks, selling off in fear, and for good reason. We've seen four banks either be taken over by the FDIC or voluntarily, in the case of Silvergate Capital, choose to wind down their banking operations. I'm Jason Hall. This is The Smattering. Today, I want to talk about opportunities to buy. If there's any industry that we've learned can be counter-cyclical when you look for those opportunities to buy, it's the banking sector. Let's talk about three right now that I think are really attractive to buy and why investors should be taking a look at them. But before I talk about those banks, I want to talk about what's happened. What is the crisis we're going through? What is the risk? And what makes these three banks attractive? So the first thing is that it's kind of been turned on its head a little bit, but historically speaking, a rising interest rate environment is usually pretty good for banks because it means that they can earn a higher yield on loans and get a better net interest margin because the rates will rise faster on the loans they can sell than the yield that they pay for depositors. It usually happens in a healthy economy. All things equal, it's generally a net positive for banks. This one's been different because rates have risen so incredibly quickly and moved from historically low levels back in 2020 and 21, resulted in most of the bank failures that we've seen so far. They held way too many low yield loans and their cost of money was going up. At the same time, we saw a loss of confidence in their business that resulted in bank runs and basically made them insolvent. So all of those things have happened. So thinking about avoiding that risk, number one, that's a great place to start when looking for opportunities. The one that I want to talk about first is Bank of America. This is one of the biggest banks by deposits in the US. It's one of the most stable. Also, I think one of the best run banks. Brian Moynihan has done an incredible job over the past dozen plus years of moving it from one of the most structurally questionable banks to one of the best run institutions in the US. It's also one of the too big to fail banks, meaning that it has to pass a higher level of regulatory scrutiny. And then if you take a look at its loan book, it doesn't have outsized exposure to a large number of those low yield mortgages. It has a really good mix of lending businesses. And here's the big one. So far, its deposit base of ultra low yield deposits has proved relatively sticky. Okay, so you put all that together, you have a relatively safe bank. Maybe it's not going to grow at a super fast rate at this point because it is so big, but you're getting a great trade for that. This is a bank that usually about trades for about 1.2, 1.3 times book value over the past few years. And that's a fair price if kind of approaching that higher end of the valuation. But today it trades for 87% of book value. Assuming the assets that it owns are as good of a quality as they probably are, that is a big margin of safety just to seeing the bank return to a normal valuation, the multiple increasing back to what investors normally want to pay for this bank, and you're going to gain a pretty solid return from that. Again, you may have to hold it for a while to get through this volatility and concern with the economy before it returns to kind of a normal valuation. But this is a good opportunity to do that. And you're going to get a really good yield right now, too. The dividend yield's been pushed above 3% because the stock price has come down so much. So I think if you're looking at a multi-year hold, this is a great foundation for a bank portfolio, and now's a great time to buy Bank of America. All right, let's move on to my favorite diversified online bank, and that's Axos Financial. As much as every bank now has become an online bank, Axos Financial is one that doesn't have retail banking at all. You don't go to an Axos on the corner. They don't exist anywhere. This used to be called B of I Holding. It used to be Bank of Internet. It's rebranded because it's become much more than just a jumbo mortgage lender and a high yield online savings account company. They have a business banking. They've moved into other lines of businesses, commercial and industrial lending, auto lending. They've become quite diverse. They have a lot of fees-based income that they earn from services that they provide, financial services. So I think this is one that's become a more stable, well worth owning bank. It's still small. It's still growing at a rapid rate, can grow its deposits and income at high single digits to mid-teens. And it's trading for a little bit less than 1.2 times book value. That might seem like, wow, well, you're talking about close to fair value for Bank of America. Couple things. It's much smaller, so its ability to grow from here is much better than a Bank of America. Also, it's more profitable and more efficient because it doesn't have those physical operations that take a bigger cut of revenues. So as long as it remains high quality, it's going to trade for a higher premium than a Bank of America. So 1.1 times, 1.2 times book value, tremendous amount of upside to buy it at this price. You're not going to get a dividend right now because it's really focused on reinvesting its profits into growth and expansion. Greg Garrabrants, I think, is one of the great CEOs in the banking industry. He's definitely wired the right way to not over risk. And now's a good opportunity to buy Axos Financial. Last one, I think it's really worth taking a close look at Live Oak Bank. This is another one. I'm taking a look right now. Its book value is down about 1.1 times. Another situation where we don't have a big retail footprint. What makes Live Oak Bank really attractive to me is the strategic focus they have on small business lending to different industries that they identify that they like the tailwinds and they like the profitability because it meets their risk profile and their potential growth profile, focusing on the low risk and profitability first. They also have a little bit of a detached deposit base from their lending base. Most of their deposits are high yield online savings. So they don't have their borrowers and their depositors all in the same mix. They're trying to change that a little bit. They want to grow their deposit base and become more of a full service bank to their borrowers as well, which makes sense over time. But the key thing here is they don't have massive exposure to large money deposits that might exceed FDIC limits. And that means that there's a lot less risk of a bank run, a lot less risk of cash burn businesses that might be spending down their deposits. So that makes overall for a relatively safe bank. And again, they have the right leadership that's wired the right way to not chase too much risk, trading for a really reasonable valuation at recent prices. So again, you're looking for that opportunity right now in banking. Bank of America, Axos Financial, and Live Oak Bank are three that I really think are worth owning.